TSMC just did something that wiped out nearly 3,000 points from Taiwan's stock market in a single day. That's a record drop, and here's the kicker, the company actually beat earnings estimates. Subscribe to Taiwan Tech Pulse, we bring you what Taiwan's own analysts are saying, before Wall Street catches on. Got a Taiwan tech story you want us to cover? Drop it in the comments. So if you're holding Nvidia, AMD, or Apple stock, you need to understand what just happened in Taipei. TSMC raised its 2026 revenue and capex forecast to a staggering $600 to $640 billion. That's at least $40 billion more than previously expected. Sounds bullish, right? But investors didn't buy it. TSMC shares plunged 180 new Taiwan dollars to 2,290 new Taiwan dollars, a 7.29% drop, the largest single-day point decline in the company's history. Over 9,000 large sell orders hit the stock at the close alone. Why would a beat and raise quarter cause such a violent sell-off? According to analysts, the market is pricing in overvaluation risk despite the strong AI demand outlook. TSMC stock was up more than 50% year-to-date before this drop. And its PE ratio had stretched to about 20 times, compared to the 5-year average of 18 times. Profit-taking was clearly at play. But there's a deeper concern, and it's one that directly impacts the entire AI supply chain. A Morgan Stanley analyst noted that rising investment demand for TSMC partly reflects asset price inflation, which may pressure margins over time. In other words, the cost of building those next-generation fabs is inflating faster than expected. That's bad news for Nvidia's future GPU pricing, for AMD's chip costs, and for Apple's ability to keep margins on its custom silicon. The sell-off didn't stop in Taipei. Bloomberg's Asia Chip Index fell more than 6%. In Japan, Kioxia shares nearly halved in recent weeks, Lasertech dropped 9.66%, and Advantis slid 7.2%. Japan's Nikkei fell 5% intraday and closed down 4%. Back in Taiwan, the broader market got crushed. The weighted index plunged 2,953.71 points to 42,671.27, another record single-day drop, and broke below its key 43,525-point quarterly moving average. Major names like UMC, Yezhou, and Nanya all hit limit down. MediaTek and Delta Electronics fell about 9% each. China's Star 50 index dropped over 5%. South Korean markets were closed, but investor caution was already brewing. Even the U.S. Philadelphia Semiconductor Index wasn't spared, falling 4.29%. So what does this mean for you as an investor? Analysts generally still see long-term AI growth as intact. The demand for Nvidia's H100 and B200 chips isn't going away. But the valuation bar has risen. A strong earnings report alone, they say, is no longer enough to reignite a broad Asian tech and semiconductor rally. The market is demanding proof that TSMC can convert that capex into profit without margin erosion. That's the key question for every company in the AI food chain, from Nvidia to ASML to your iPhone maker. Keep your eyes on Taipei, because what happens here doesn't stay here.